Warren Buffett, the most successful investor in the world by such a huge margin. And as long as I can remember, I have always seen him in the top 5 richest people of the world's list. Now, Warren Buffett uses a special indicator, and that indicator is made by him and named after him. Today, my friends, we are going to talk about the Buffett indicator. So, what is the Buffett indicator? Now, the Buffett indicator clearly shows that if the markets are overbought or underbought, if the markets are overvalued or undervalued, right? So, the Buffett indicator does not talk about a specific share, it talks about stock markets on a whole, it talks about the entire index, right? Before explaining the Buffett indicator, I need to clear this out for you so that you don't get confused. Now, there are two types of analysis. First, there's a macro analysis, then there's a micro analysis. Macro analysis, micro analysis. Now, for people who don't know what macros and micros are, so basically, if suppose, let me give an example. If I watch the movie Gully Boy, right, and I critique Gully Boy, so that is a micro analysis. And if I critique Bollywood on a whole, तो वो क्या हो गया? Macro analysis. So macro analysis is on a larger scale, micro on a smaller scale. So with the same example, to give you another example, if you study the world economy, it is known as macroeconomics. And if you study the Indian economy, it is known as microeconomics. So macro, larger, micro, smaller. Now this indicator shows you that are the stock markets overbought or oversold, undervalued or overvalued on the macro basis, not for a specific share, on the entire stock market basis, right? Now, which is more important, the macro indicators or the micro indicators? See, in fundamental analysis, there are two methods. First method is you go from company to country. First, you study the company, then you study the sector, then you study that industry, then you study the country. And if all the points check, you buy. On the other, what is the other type of analysis? This is bottom to top. Now I'll tell you top to bottom analysis. What is top to bottom analysis? First you study the country, then you study the industry, then the sector, then the company, right? Which one is better? See, to whichever suits you. If you ask me, my personal choice is the latter one. I prefer top to bottom, from country to company. But if you want to go with the other way around, that's also okay. It depends what suits you and what kind of study do you prefer, right? So this is the macro analysis, micro analysis. Buffett indicator is a macro indicator. Now I'm just seeing if I don't forget any points. Okay. Now again, another point I need to mention here is that it's a fundamental analysis indicator. It's not a technical indicator. Buffett indicator is not a technical indicator. It analyzes the fundamentals. It takes into account the fundamentals of a country. Cool. Now finally, what is the formula for Buffett indicator? Buffett indicator is equal to the market capital upon gross domestic product into 100. Buffett indicator is equal to the market capitalization upon gross domestic product into 100. Now, to explain this, now when I talk about market capitalization in this formula, what is market capitalization? Market capitalization is current price of that share into the number of equity shares available, right? If you multiply both of them, so you get the current market capitalization of that company. But when I say market capitalization in the Buffett indicator, I don't mean market capitalization for one company. I mean the market capital of the entire index, right? So if I'm taking the market capital of, if suppose let's take Nifty. So I will not take in market capital, in again the formula, I will not take market capital of one specific share. I will not take of Reliance or ITC or HDFC Bank. No, I will take the market capital of the entire index. So what will happen? I will take separate market capital of all these companies, add them up, and this is the market capital which is used in Buffett indicator. Done? Second, upon GDP. What is the GDP? GDP is the gross domestic product. So to explain in simple words, gross domestic product is the value of all the goods and services produced in an economy, right? We all have studied in economic books, ठीक है? But इसको वैसे simple नहीं हुआ. Let me reduce it down for everyone. So basically, if why is GDP considered to be so important? Why is that? Because if the GDP is increasing, what does this mean? That the producers, the manufacturers have increased producing their services and increased producing their goods and services produced in the economy. Cool. So if that is happening, that means, and why are they, what does it imply? It implies that they are producing more because people are buying more. If people are buying more, then companies will produce more. If companies will produce more and sell more, they will have more profit. Then they will increase their production, and if they increase their production, they will increase giving jobs. Now, if jobs increase, people will have more money. They will spend more. The companies will earn more profit, and the entire economic cycle goes on. Right? So this is why GDP is considered one of the most important tools to analyze an economy, to judge an economy. I'm sure all of you have heard about gross domestic product, right? So coming back to the formula, the market capitalization of the entire index upon the gross domestic product into 100. When you do this, you find out the Buffett indicator. Now, if the Buffett indicator is above 100, then the markets are overvalued and you should not invest in stock markets. Again, this indicator does not talk about a specific share. If the Buffett indicator is over 100, you should avoid investing in the stock markets. Why? Because they're extremely overvalued. And on the other side, if the Buffett indicator is below 100, that is the time the markets are undervalued, and that is the time, my friend, we should invest in stock markets. Tick? Now, there's a big disclaimer to this. There's a big disclaimer to this, that this indicator does not work in our country. The Buffett indicator does not imply for our country, right? Now, guys, this is what happened, because when I was 18 and, I didn't go to college, I started with stock markets. So at that time I had no source. So I read every book I could come across. So from Howard Marks to Peter Lynch to George Soros to Benjamin Graham to Hesse Livermore to Martin Pring. But the biggest problem was that all of these investors, good investment books, are majorly based on the American economies and the American markets. And the American markets are, in very major ways, completely different to the Indian markets. Now, why doesn't the Buffett indicator work in the Indian markets? It will not work in the Indian markets. Why is that? Because, okay, first you think about it. Again, it's not an interactive session, so I can't ask you. You think about it. Why do you think the Buffett indicator will not work in the Indian economy? The formula for Buffett indicator is the market capitalization of the entire index upon GDP into 100. Why would not it work for India? Okay, I'll tell you. The reason why it won't work for India, because in India, the GDP is not the true economic picture. In India, we have black money, guys, right? We have black money. Now, in black money, as you know, in our country, there are two separate economies running. One economy is on paper, that is shown by the GDP. The other economy runs on black money, right? There are businesses running on black money. There's an entire parallel economy in our country running on black money, right? So, and again, we can only estimate till what extent the black money is available in the country, but there's no exact figure on it, right? So that is why in India, as the GDP is not the true picture of our country, this indicator does not work here. This indicator only works for America. This indicator works on the S&P 500, not only on America, basically in any country in which the GDP is the true picture of that economy. And I would say for America, it works perfectly. I'm assuming it must, because then Warren Buffett wouldn't be so rich, and he's used this indicator all the time, right? You've seen in interviews, he always says and always mentions the Buffett indicator, right? So again, whenever the Buffett indicator is above 100, you sell because the markets are very overvalued. Whenever the Buffett indicator is below 100, you buy because the markets are undervalued. You know what is the Buffett indicator right now? The Buffett indicator right now is 130.9%. 130.9%. So should you buy the markets or sell out of the markets? Well, according to the Buffett indicator, it clearly suggests that markets are overbought. Now again, the figure I told you, this is for S&P 500. S&P 500 is the American index, right? So we've taken the market capitalization of the entire S&P 500 and the GDP of America in 200, which is 130.9%. Now, how can I use this in Indian markets? because the Indian markets are heavily influenced by the American markets, right? We all see it. If you see the Dow Jones and Nasdaq this night, tomorrow, chances are, and there's a very high probability that Nifty and Sensex will replicate what Dow Jones and Nasdaq close at, right? So this is why we use it on the American markets, and yeah, so that's about it. And that was the Buffett indicator, guys. So according to the Buffett indicator, definitely one should not invest in the markets right now, because the markets are very overvalued. And so much so, if you actually see, if you read about Warren Buffett, you'll see that he sold off a major stakes in stock market. He was in cash for the past 2-3 months, and he has now, recently I just heard in an interview that he has now put in a major stake in gold, right? And after gold is the all-time high. And guess what? I have been invested in gold for the past 2-3 months. I actually made a video on gold. I'll link the video right here or here, right? So watch that video, that why should you invest in gold right now, and why does gold seem a much better investment proposition compared to equities, right? Well, guys, that was the Buffett indicator. I hope you liked it, and I hope you study about it. I'm going to link an article for the Buffett indicator in the description below, so that you can study it. And if you want more interesting topics like this, if you want more interesting content like this, then my friend, be sure to like, share and subscribe, and I'll get back to you with another interesting topic in stock markets. Till then, my friends, this is Harsh Goela, financially empowering you.